UBS's Global Wealth Management putting out a note that some of the world's wealthiest are preparing for a sell-off in 2020, writing the following: investors see reasons to be cautious in the new year. Almost 8 in 10 investors feel markets are moving towards a period of high volatility. More than half of investors expect a significant drop in the markets at some point in 2020. As a result, 52% are unsure if now is a good time to invest. Michael Crook of UBS Global Wealth Management joins us now here in New York. Michael, great to catch up with you.
Yeah, thank you, Jonathan.
Explore that further for us. What is holding them back?
So it's the typical issues: trade, policy. We have an election coming up. A lot of investors can find something to be worried about if they want to be, and I think that's what we're seeing. 52%, little over half, are expecting to see a big sell-off. I think the flip side of that is they also see optimism in the future, and so it's a question of how do they balance those issues.
So time horizon matters here.
Time horizon matters.
What's your advice to them at the moment?
So time horizon matters. First of all, we would push back on some of these risks and say that they shouldn't be as concerned as they are. We've been through a period of higher volatility. We had a pretty big sell-off last year. Hopefully they've learned how to handle that from a financial standpoint. But our real advice to them is it makes sense. We're at the 10 years into a bull market. It makes sense. If you haven't taken a look at your balance sheet, at your portfolio, make sure you know what you're going to do if we have a big sell-off and that you're prepared for it.
Describe your client base to me, because we had a Bank of America Merrill Lynch fund manager survey come out just yesterday, and the cash balances in that were at multi-year lows. So this is fund managers putting money to work. Yes. Compare that to what your client base actually is and why they're holding back when what we see elsewhere is a lot of people put in additional capital into this market.
So the survey group that we talk to are wealthy investors. So these are not billionaires, but they're investors that have millions of dollars. And I think that's the difference here is if you're a fund manager and you're thinking about nothing but pure performance from an asset standpoint, it's a lot easier to put cash to work than if you're concerned about things that might impact your personal life. And that's the question here. I think what we're seeing in the survey is investors are basically saying they don't want a market crisis to become a personal crisis. And so what they're doing is they're holding more cash to try to avoid that event. Whether or not that's the right thing to do, it's pretty debatable.
Would you extend this to what you see in business confidence as well? Because what I've been trying to get my head around recently is quite clearly it takes a certain level of confidence to put some money to work and buy a futures contract, and a whole lot more confidence and conviction to go and build a factory, to extend a business, to invest in your staff.
Exactly. And so I would connect the two, absolutely. We did a survey of business owners a couple of months ago, and this is exactly what we saw, that confidence has come down. And so they've not necessarily pulled back on hiring and investment, but they've certainly reduced their forward-looking plans to hire and to invest in their businesses. Part of it seems like they're waiting for some of the uncertainty to be settled.
So you disagree with the elevated cash balances. Where are you telling them to put the capital? If you can convince them, where are you telling them to put it?
What they're telling us is they have a lot of cash, and 20% of investors roughly said that they're entirely in cash. That's rarely the right position for anyone, no matter really who they are. Over 50% said they're thinking about increasing their cash positions. What we would say is take the time to make sure that you have what we call a liquidity strategy. In order to be successful, you have to survive, right? So first and foremost, make sure you can survive whatever happens in the market. But after that, know what you're going to use your money for. Is it money that you need for retirement? Is it money for legacy purposes, next generation? And invest appropriately for those goals.
How would you rank the hierarchy of concerns right now that they have going into 2020, and where does politics feature?
I think that politics comes up a lot because it's one of the things that's easy to talk about. And we certainly hear a lot of concerns. There's both, from a policy standpoint, on both sides of the aisle. But what I think is really happening there is they're thinking about those policy concerns, but internally they're trying to figure out how it would impact them. We have a lot of baby boomers in the country that are getting ready for retirement, right at retirement. They're concerned, right? And the last thing they want to have happen is to see their portfolios decline by 30%, 40% right before they want to retire. They're trying to take steps to prevent that from happening.
Historically, just as a final question, when you see the cash balances of this particular constituency of clients as high as they are, has that been a bullish signal?
There's a lot of contrarian signals in data around personal investors. And so I think right now, we wouldn't necessarily see that as a short-term sign that investors should be really increasing their equity positioning, but we see it more as just where we're at in the cycle today. But there's no real indication that because individual investors are pulling back that we should be overly concerned about a drop in the market.